at the right time.
Thanks for tuning into Countdown. My name is Neeraj Shah, and the markets have, well, I wouldn't say recovered completely, but off the lows of the day, if that is any solace. We're not doing as bad as we were at the start of the trading day. Not to say that 0.5% is really bad stuff as well. So, trading about 30 odd points lower in trade for the Nifty Bank and the Sensex too, pretty much the same tune. The mid caps and the small caps in the market breadth should come up on your screen for just a brief moment. Marginally in the green. These indices too had started off in the red, but marginally in the green right now. And the market breadth is still in favor of the declines, but crisscrossing for most part of the trading day today. Before we get to our markets, just a brief check on what Europe is doing in today's session. Remember, US markets had shut shop with a fair degree of red. Europe is not reacting as poorly as the US markets were, and maybe that is some solace. The Dow future should also come up on your screen after witnessing arguably the most terrible month since 1931, the month of December thus far. In today's session, marginally higher in trade. Bring up the heat map. We had an overwhelming array of red when we started off. The green has taken over a little bit in trade. Z remains the big culprit on the downgrade by Merrill Lynch, down about 8%. UPL about 3.5%. Infosys about a couple of percentage points. So IT, Z, a couple of banking names, the likes of Yes Bank and HDFC are trading in the red. What's done well? Bajaj Finance continues to rise and shine, another 1.5% higher. Sun Pharma about 3% higher, and all marketing companies have a half decent outing in the session today. But mid caps and the small caps all over the place. I don't know the quantum of the gains though, and whether the gainers are overpowering the losers.
Well, so far so good as compared to the benchmark indices. At least there is that slight bit of an outperformance as the mid caps and the small cap, the indices have moved into the green. Individual stocks then, and a few of them have made decent good moves in intraday trade. So starting off first with the ones that are gaining, you've got the likes of United Breweries, which are buzzing in trade today, closer to 4% higher. Power Finance Corp trades with gains of around 4%, and Sterlite Tech 2 is up a good 4.5%. Technology is under pressure, and it's not just witnessed in the large cap space, but even in the mid cap space. Tech stocks are taking the brunt of it. So Mindtree is down about 3% You've got Cyient, which is down 2%, and NIT Tech around 2.5% given up. Within the small cap space, a few stocks buzzing and making good moves include the likes of Wendy's, which is up 4.5%. Max India, that is at 85 now, so that stock's a good 7% in intraday gains. And Ashoka Building Products, remember this stock had witnessed steep corrections in the last few weeks, and today the stock is seeing gains of closer to 5%. A stock that is approaching its 52-week high is GlaxoSmithKline at 7,818. Its 52-week high is somewhere closer to 7,920. So just a smidge away from making those 52-week highs. So those are some of the stocks that are moving about in the broader market. But what's been happening in the more liquid universe in the futures and options space? We've got Agam Vakil joining right now to highlight the same for us. Agam.
Well, consolidation largely, Devina. At this point in time, we're not seeing too much. Let's bring up the Nifty futures then. And as you can see, we're looking at about 0.2% declines. We have come off from day's lows, but we're trending in the red all the same. And there is a little bit of increase in open interest towards fresh shorts. Let's bring up the Nifty Bank futures then. The trends aren't very different here, considering a marginal decline for the index, and the bank and the open interest rising by as much as 5% in trade. India volatility index, earlier in the day was declining. It is climbing right now, but it's still below the mark of 15, which should soothe the nerves for those who are long in the markets at this point in time. Let's move on and talk about your open interest change, and this perhaps is important because we are seeing so much writing around the 10,900 and the 11,000 calls. But on the lower end, considering the fact that the Nifty manages to hold about 10,800, a little more writing and then around the 10,800 put as well. Let's move on and talk about stocks then. And in terms of stocks, there is a lot of traction in something like an Ujjivan Financial. As you can see, 22% added in open interest towards longs. And moving on from Ujjivan Financial to the next stock, which is also looking at a lot of traction towards the longs, is United Breweries. Up 4.5%, 24% added in open interest. On the losing end, however, we also have some weakness in Z Entertainment. Some actually not really. We have quite a bit of weakness. It's down, well, nearly 9%, and a lot of shorts building in. If I'm not mistaken, this is currently trending at day's low. So the selling pressure has only intensified. And we're going to have to wait and watch whether or not traders will have some respite. But for now, mixed trends coming in with the benchmarks, well, largely, I would say, range bound at this point in time.
Thanks for that, Agam. So that's essentially the market build up for the day. Let's talk about specific corporates. Ashoka Buildcon is a stock in focus. The company is looking to expand its city gas distribution arm with a fund infusion of 150 crores from Morgan Stanley India Infrastructure. To discuss this in detail, joining us on the phone line is the Chief Financial Officer, Paresh Mehta. Paresh, good having you. Thanks much for joining in. Can you tell us about this fund infusion that has come in? Unless I'm very wrong, Ashoka Buildcon and Morgan Stanley will hold about 51% and 49% stake respectively. But what does this fund infusion mean for the business? How are you looking for this business to take shape and form over the course of the next few quarters?
Right. Good afternoon. As we have said, Morgan Stanley's team and Ashoka Buildcon's team have been working together for the last couple of years in identifying and developing this business. They have now committed to invest 150 crores. And in this business, we have 5 districts under our portfolio. One is Ratnagiri, which was initially one, and where we have already started commercial operations. And then we have Latur, Osmanabad, and Chitradurg, Devangiri in Karnataka, and previous one in Maharashtra. So this is the portfolio which we currently have. We would have entail an investment of around 650 crores. So part of the equity to be infused by them and ABL put together around, say, 300 odd crores would be partly invested in these projects, and we'll look at new projects also. The 10th round of bidding for CGD space is scheduled to happen in February, where 50 GAs are being lined up, and we will be participating and trying to see whether we can ramp up our capacity and portfolio size. So that's what we're looking at.
So this money that you're talking about is also going to be used for new bidding?
Yeah.
All right. So, and 150 crores, that's all the requirement currently, or there is a possibility that this amount could increase and you will look at a larger amount right down the line as and when the bidding process starts? Yeah,
so this is the initial commitment which Morgan Stanley has given, and they are keen in growing this platform, and so definitely they will put in more funds as and when required over and above this 150 crores. So definitely it's a platform to be grown, and there is a lot of potential. Green energy is definitely an alternative which everybody is looking out to replace the traditional conventional energies. So I think so it's a great future, and the government also is pushing a lot to see that conversion from petrol, gas, and other type of fuels are replaced by this CNG and LNG.
Okay, so just to simplify the shareholding now, so in your gas distribution arm, with this 150 crores which is coming in from Morgan Stanley and India Infrastructure, their holding goes up to 49% for 150 crores, or this is something that's a part of a larger payment that they're going to make to you later?
No. This is so they will hold 49% for infusing this 150 crores. So we will put in 51, 49 as we go ahead, and they will exhaust this overall 300 crores will be invested in the ratio of 51-49. Any future money also will come in. They will come in the ratio of 51-49. ABL will put in 51% and 49% will be put in by Morgan Stanley.
No possibility of a further dilution?
No. There's no vision at all. Ashoka Buildcon will continue to hold 51% in the business.
Paresh, what's the scale up out here? The only reason I'm asking this to you is when the already entrenched players in the city gas distribution business are taking on the smaller cities, the payback period is a question mark, because one, the densities, to the quantum of usage. You've gotten one license and you won 2 additional licenses in Latur and Osmanabad. These must not be very large markets. Are you looking to scale up in tier 2, tier 3 towns predominantly?
So we will definitely look at all kinds of projects, but the jump will not be very steep. It will be gradual, and maybe in the next round of bidding, we'll target something around 400 to 600 crores of investment projects, and then we'll look at other biddings also, which will come in later. So we will look at every type of city, but viability would be a priority from our angle. It's not just to expand the capacity. So IRR would be a focus.
Okay, just one question. What's the growth in this city gas distribution business? Some numbers or some skeletal numbers that you can share, say taking shape and form by March 2020, which is about a year and a half from now.
I think so. By we would have had invested approximately around this 650 crores, almost 60-70% of this 650 crores of project, and we probably would by 2020 we would do revenue of around by 2021 around 250 crores based on these three projects. So I think so we'll keep on growing.
All right. Got that, Mr. Mehta. Just, from the year-end perspective, I mean, now that we're already, the first half is done and dusted, come quarter three, end of quarter four, by the end of the year, what are the key variables that we can watch out for in terms of growth numbers?
With respect to the company?
Yeah.
Company's EPC revenues will grow by 30-35% as stated. We'll retain our EBITDA margins in the range of 12-12.5%. And I think so. The year looks good for present. Bidding definitely is subdued as of date, definitely. And I think so we'll pick up in this first part of the next quarter. Post that, I think so there'll be some lull.
With this diversification that you're taking in terms of the city gas distribution, any meaningful contribution to the numbers coming in within this year?
No, I don't think so. It's as per a defined plan. So this investment will not change it will not change the profile of the EPC earnings. It will remain similar. So we would have invested. Now our partners also will invest accordingly, simultaneously. Okay,
got that. We leave it at that, Mr. Mehta. Thanks very much for joining in. Appreciate you taking out the time.
Thank you.
All right, that's the management at Ashoka Buildcon talking about the 150-odd crores that the city gas distribution arm has got from Morgan Stanley India Infrastructure. Stocks up about 3% in intraday trade. 131 is where it's currently trading at. Well, moving on, we're nearing the end of 2018 and it's time to take a look at how Indian equities have performed this year. So Amit Sarkar is standing by with the best and worst performing sectors for the calendar year so far. So
I'll start off with the major indices first. If you see the Nifty index, now that has gained nearly 3% so far in 2018, while the Nifty Bank index, now that has gained nearly 6%. Now this is a third straight year of gains for both the indices, but the gains are the lowest in the last 3 years. That is followed by Nifty IT, now that has gained nearly 28%, the most since 2013, and this is the second consecutive years of gain for the Nifty IT index. And if you see, it has been led by the major players, that is TCS and Tech Mahindra. Nifty FMCG clearly acting out as a defensive year, 10th straight years of gain, and in 2018 it has gained nearly 14%. Now on the loser side, if you see, the Nifty Realty Index, it is the worst sectoral performer. It has declined nearly 32%. The only index with no gainers, but this is after the index gained nearly more than 100% in 2017. Now this is followed by Nifty Media Index, which has dropped nearly 25%, the highest drop seen by the index since 2011, and the only gain in the index was PVR. Nifty Auto Index dropped the most since 2008. It fell nearly 22% in 2018 on the back of lower sales volume, trade wars, higher raw material costs, and because of rising crude prices. Nifty Metal Index, after 2 consecutive years of gain in 2018, the index fell nearly 20%, its highest drop since 2015 because of fall in prices and because of trade wars. Lastly, Nifty Pharma, third straight year of losses in 2018. It declined nearly 9% on the back of the continued pricing pressure seen in the US market and because of competition.
Okay, Samit, let's talk about individual stocks then. Let's break them down and see what's happened to each of them individually.
So if you see stock specific, TCS and Tech Mahindra stand out. Now they have gained the most since 2013. In 2018, they gained nearly TCS gained nearly 48%, while Tech Mahindra gained nearly 43% on the back of rupee depreciation and because of deal wins. Bajaj Finance, now that gained nearly 41%. This was the 7th straight year of gains for Bajaj Finance on the back of the steady rise in their asset under management and because of stable NPS. Dr. Reddy's, now that has gained for the first time in 4 years. In 2018, it gained nearly 8% on the back of steady quarterly earnings, cost control measures, and on the back of the fact that the company won the case for Suboxone against Endeavor. Now on the loser side, interesting trends here. HPCL declined nearly 45%, while Sun Pharma declined nearly 26%, the most since 1998, that is in the last 20 years. Now, HPCL declined because of contracting marketing margins, while Sun Pharma declined on the back of corporate governance issue. Airtel, Indiabulls Housing Finance and Infratel, now that declined the most since listing in 2018. They have declined in the range of nearly 33% to 41% in 2018. Now Airtel and Infratel declined because of consolidation seen in the telecom industry and because of pricing pressure, while Indiabulls Housing Finance declined because of the liquidity crunch that we have seen in the NBFC space. Lastly, Eicher Motors, now that declined nearly 22% in 2018. The first decline that the stock has seen, yearly decline that the stock has seen since 2008 because of lower sales volume and because of a planned shutdown seen in 2018. Now in the broader market, if you see, PVR stood out. Now the stock gained nearly 11%, the only gainer in the Nifty Media Index, and this is the 7th straight year of gains for PVR on the back of steady growth and because of its inorganic acquisitions. Then Biocon, now that stock stood out in the Nifty Pharma Index because it's the only stock that has been bucking the trend for the Nifty Pharma Index. In 2018, it gained nearly 18%, and this is the 4th straight year of gains for Biocon. Exide Industries, the only stock in the Nifty Auto Index which has given some substantial returns to investors. In 2018, it has gained nearly 16% on the back of fall in lead prices, market share gains, and because of new product launches. On the loser side, 2 stocks are stood out, both from the real estate sector. That is the only sector which had no gainers. Indiabulls Real Estate, which fell nearly 62%, the most since 2008, while DLF, which declined nearly 31%, the most since 2011 because of the liquidity crunch and because of rising interest rates.
Thanks a lot, Sumit. Thanks for putting that into perspective. Very interesting PVR. I was talking about this in the morning as well. As much as we would want to talk about how Netflix and Amazon Prime, etc., might be disrupting the business, the stock continues to do well, and I'm guessing that's a factor of how well the numbers behind PVR is looking as well year after year.
Talking about doing well, I think it's a full recovery for the markets right now, for the Nifty as well as the banks. A sort of a complete turnaround in morning trade. So we've completely flattened out from being down more than 0.5% on the benchmark indices. The bank Nifty back above 27,000. Just about breaking into the green now. So there you have it, about 27,012 on the bank Nifty. What's doing well? Sun Pharma, that's up about 3% Power Grid is up 1.9%. Bajaj Finance, that's up 1.5%. L&T 1% now, 14.24. Remember, L&T's buyback price is 14.90 or 14.95. So it is making that fast approach towards its buyback price as well. HCL Tech makes a recovery. So in the morning session, where most of the larger IT names were trading with losses, as you can see, in the morning itself, the first half of trade is where HCL Tech turned around, now almost at the highest point of the day for the counter. And that's on the back of a stronger currency. So that's interesting. So if you pull up the rupee, and it would be great to see an intraday chart of how the rupee is done, because the strength of almost 1% in intraday trade for the currency, as you can see out there, 70.89 is where the rupee is trading at right now. It opened somewhere around 71.31 odd, and from there it's been just going one way, and that is up. So that's what you have. Moving on. Well, a good wedding season has come to the rescue after a lackluster Diwali. In a chat with us earlier today, Titan CFO S. Subramaniam explained how sales on a daily basis is boosting same-store sales growth. So will a strong Q3 backed by wedding season sales help Titan meet its FY19 guidance? Let's listen in.
I think we have a good wedding season. We've had post Diwali, it's been quite good. The traction has been good. I think it's been helped by slightly stronger rupee compared to the months before that. And generally, I think we've been having good traction. Sales on a daily basis have been quite decent, pretty much in line with our internal targets. So that's the good news. And it's pretty much, I mean, it's over as of now. The wedding season is actually over. The next 15 days will be a little low because up to I think mid-Jan. But otherwise, I think Q3 has been quite good.
So would we
in terms of growth, I think you mentioned 25%. That I think was the figure we were looking for the whole year. So this quarter, I think we should be actually quite good. Yeah.
If you can highlight for us, much of the contribution has come in from same-store sales. The expectation was that you would see a beat in that, where contributions have been about 60% from SSSG. This time around, it will be slightly higher, about 70 to 75%. Has that been the case?
Yeah, it is. Actually, most of our growth will be same-store growth. Between 75 to 80% of the total growth that we show in any quarter or period would actually have to come from same store. So if we look at, say, 20% growth, between 15 to 16 at least should come because of same store growth, and that's how this has been panning out every quarter. So I don't see that as an exception now as well.
Okay, so two follow-ups are there, Mr. Subramaniam. Firstly, without getting into numbers again, but would a strong showing in Q3 help you very easily meet or probably beat your year-end targets because of a little bit of apprehension that could have been there for how Q4 would turn out?
I think we'll take it one step at a time. Q3 has been quite decent. So it gives us reasonable hope that Q4 will not be very different from this, at least as of now. Gold prices, if they are soft, demand does tend to pick up. So it's been quite, as I said, decent across this quarter, and therefore one is hoping Q4 also will be good. But we'll take it one step at a time.
Okay, so we'll probably talk to you one step at a time as well. Maybe the next quarter we'll talk about Q4. The other follow-up is you speaking about how the same-store sale growth would essentially drive numbers. So one, I'm guessing that is margin accretive, and therefore would you believe your operational metrics would look a lot better at the end of the year than what they would have at the start of the year? And part two of my question out there too, despite you betting on same-store sales growth, I think you've charted out fairly interesting initiatives for better jewelry growth in terms of expanding into 100 more towns, opening up more stores as well. Is that the next leg of growth for 2019?
Yeah, that would be the case. Now, coming to the margin, I would assume, yes, the margins for the quarter, this quarter and the next one as well should be better than what it was in the first half. We mentioned that as well earlier, and that's largely because we had a lot of ad spends in the first half in the jewelry business. It was the opposite as far as the watch division is concerned, but as far as jewelry is concerned, you would start seeing margins getting better because of the top line growth. The operating leverage should kick in. And as far as the additions are concerned of stores in the next year, yes, we are planning about 40 stores this year, and we hope to achieve that target. And as of now, we're looking at least another 40 stores next year as well. So we are going a little aggressive as far as network expansion is concerned. We think there is significant opportunity. We've talked about going to 100 new towns in the next 5 years. From the 250 or so, 150 or so that we are present in now. So I think that looks possible, and we are gunning for it.
That's of course Titan for you, talking about how the outlook ahead could look like. Sounded fairly optimistic. The only good part that came out of all of this, to my mind at least, was that one, he's confident about a good showing in Q3. And two, I think the margin expectations from Titan, despite the growth numbers looking good, are robust. They are not falling back, which means that growth will come at a good margins because the same-store sales growth numbers are looking very robust in the jewelry business at least. So that's an interesting one for Titan. By the way, as we speak, we spoke about how the markets have done remarkably well in the last 30 to 45 minutes of trade. Hero Moto might have some part to play out there because it's one stock that's gained quite a bit in the last 5-10 minutes. So there you see on your screen quite a bit of a spike. At the broader end of the spectrum, we don't have too many stocks moving around, but for stocks like India Cement and Thermax, which have done reasonably okay. However, since we are talking about buzzing stocks, let's bring in Sharad Dubey, who is standing by with a list of 2 or 3 names and the reasons that they could be buzzing. Sharad.
Yes, Neeraj. The first stock I've picked up is Z Entertainment Enterprises, which has fallen by almost 8%, its highest level in a week. This is based on the news of Bank of America and Merrill Lynch news, which downgraded the stock to underperform with a revised price of rupees 375 rupees. Basically, there are 4 concerns which I'll be pointing out. The first one being the liquidity concerns, that the company is not finding a strategic investor by around April 2019. Then the company will also acknowledge that there will be a lot of structural issues coming up due to the lack of technological expertise. The third point is there will be a near-term pressure on broadcast and ad subscription revenues due to non-extension of the December 29 deadline to select a la carte channels. The fourth point is the investors are concerned with the cash invested in overseas funds like Poseidon and Actinium. They also expect Jio to disrupt media landscape in the next 12 to 18 months. The second stock is UPL, which is down by almost 3%. Its lowest levels in almost a week. This is based on the news that CIMB had given a reduced view with a target price of around 593 odd rupees. They have told that the European drought will likely impact the fungicide and insecticide sales. Apart from this, volume and pricing risk will be also seen as new formulations come from the House of Bayer and DuPont. And also Intacta adoption rate has increased in soybean plantations in the LATAM business. This will also reduce the insecticide sales. The third stock which I have picked up is Bombay Dyeing and Manufacturing, which is up by 5%, its highest levels in 2 months. This is based on the news that board has given consent for closure of its loss-making Indonesian arm. The management also stated that all financial risks related to the arm has been provisioned in the past year's financial. The expected date of completion for this will be December 31st, 2019. These are the stocks, Neeraj.
Well, thanks a lot for that. 2 or 3 names. Some which you can figure out could be doing well for reasons, and some which have fallen off completely because of some adverse notes. In Z's case, I think he's got to do the report from Bank of America Merrill Lynch. Nevertheless, okay, let's talk about some other stocks. Coal India, the board will be meeting on December 20th to consider an interim dividend. The coal miner rewards its shareholders rather generously if past records are anything to go by. Nikki Bijandani has gone through the data to draw up the 3 scenarios. Nikki, what can the shareholders expect?
Sure. I'm going to start off with the stock price momentum. In the past 7 days, we've seen the stock rallying 6 out of 7 times and fetching returns of more than 6.5%. We've drawn on upon the list of dividend history that the company has given back from March 2013 to March 2018 until this year. In fact, in the span of 5 years, the average dividend comes out to be rupees 18 per share. And at the low, it is at rupees 4.3 per share. That's the level that we saw in September 2013 when the company gave out the dividend, and the highest that we have is 27.4 per share. Now we have back calculated this data for the calculation of dividend payout ratio to understand the cash utilization that the company will actually have to shell out the cash in order to give that kind of dividend that you've just spoken about. That average high and the low at average of around 18 rupees per share, the company will have to utilize 11,000 odd crore share. At the highest price, that's the highest dividend of rupees 27, it will have to shell out a consideration of around 17,000 crore, and at the lowest, that is rupees 4.3 per share, it will have to shell out as much as 2,670 per share. Now, to understand what does this mean for the balance sheet of the company, whether the balance sheet of the company has that kind of strength, 40,000 odd crore in terms of cash and investments, clearly a lot of room even for the buyback for the company. Now, actually, let's understand if the company, how much will the company give to the government with this kind of dividend. At an average price, it will have to give an, it will pay government a consideration of around 8,000 crore, given that the government holding in the company is to the extent of 73%. At the highest dividend rate, it will give a consideration of 12,000 crore, and at the lowest, the consideration would be a little less than 2,000 odd crore.
All right, Nikki, thanks very much for that. So that is Coal India, and historically how the company has given dividend payouts, and based on that, what is the likely amount that the government could receive, considering that it holds around 73% in the company. 252 is where it's currently trading at. Should actually look at what's been happening with crude oil as well, because intraday you did see a sharp correction for crude oil as well. So now Brent crude is trading under $59 per barrel, and that's an intraday cut of about 2% that has been seen. So, you know, while we were talking about the all-important OPEC meet last week, a cut of 1.2 million barrels per day by OPEC and its allies have done nothing in terms to prop up the prices of crude, which in turn only have started to come off further. So you are witnessing weakness. Nonetheless, this is obviously a positive for us as well as for some of the sectors which are heavily reliant on crude oil. Taking a look at tire companies, paint companies, and just pull them up to see how each of them have been performing, because it's been a steady slope down for crude oil. CR is up about 1.5% in trade today. Apollo Tires, not much happening, though started really on a positive note. JK Tires is up about 2.5%. But the last few days, nonetheless, have been positive for these companies.
Well, let's get in an important market voice. Gautam Shah of JM Financial Services with us on the show now. We're talking for the first time. Gautam, good having you. Thanks so much for joining in this afternoon. Neeraj here. Good afternoon.
Afternoon.
If you can start off with this very basic thing. Today the markets, as we speak, have just moved back into the green. Do you look at correlations between crude, the currency and the Indian markets? And if so, what do they tell you about what the near term holds in store?
Well, Neeraj, no real textbook correlation has really worked in the recent past, so I really don't want to go too much into that. I think with what markets have done in the last 1 week, you know, it's a pretty spectacular run that we've seen. And if one went by logic, common sense or theoretical fundamentals, there was no reason to believe that the market will be at 10,900 levels today. But having said that, I think you need to respect the price action, and it does seem as if the market discounted all the bad news really quickly. Had this been a proper downtrend, you know, the market would have taken a lot more time to discount the negative news. But that did not happen. So in a couple of days, with the Nifty losing about 300-400 points and then testing our first target of 10,400, you know, we've seen this rebound. And with the closing above 10,850 yesterday, I think that was a sort of an indication that you will have to look at this market action with a positive eye. Also, I think the fact that this disconnect that we've had with the US markets in the last few days, I think that's phenomenal. You know, to have two back-to-back 500-point down days for the Dow and to see the Nifty do what it has, I think that tells a lot. And I think this could actually have ramifications for the many days and many weeks to come. So yes, I think the price action for now looks positive. There was a scare last week. The chart setup wasn't great, but things have changed in the last 3 or 4 sessions. And it tells us that this, you know, positive bias is likely to continue, you know, heading into the new year. So we feel that in the near term, the Nifty is likely to move towards that zone of 11,050 to 11,070. And a bigger picture target on the upside would be about 11,300 to 11,350. So that's where we should move to. And I think on the downside, we've created a very strong support band in the form of 10,650 to 750. It's not far away from where we are trading right now. But I think keeping this band in mind, or keeping this band as a sort of a trailing stop loss for you know, trading positions which people might have, I think one can continue to ride this move, which a lot of people are hating, given the fact that it's come you know, very abruptly and very sharply.
Gautam, just want your opinion on obviously the fact that we've seen such an up move that's come in post the state election announcements, and that week particularly saw an interesting amount of price action. But taking a look and juxtaposing the data from the option side, suggestive of the fact that the system was heavy with shorts, and the first leg of the up move came in because of the shorts moving out and booking losses. Now, has the market got that much breadth in terms of the depth of the market to take it further up to levels that you're talking about on the back of strong volumes and this being sustainable?
Well, it's quite understandable that there was a lot of speculative interest around the state election results. You know, this was an event that we were looking forward to for the last few months. 21. So, it's understandable that the market was volatile, and you had the India VIX test a level of 21. But the day the results was announced, the fact that the Nifty made the low in the first half hour, I thought that sort of gave you the indication that this market did not want to see any follow-ups weakness, and it had news. But while we are today at 10,900 levels, it must be said that the broader market performance has been quite dismal. If you just run through top 100 or top 200 mid-cap stocks, you will see that they haven't really participated, in this recovery. It's just handful of 15-20 stocks that have taken this market higher. But if the Nifty has to go up another, say, 300, 400 points from here, I think it's going to be the broader markets that will outperform. Because as we speak, I think the CNX Midcap 100 index is at a major inflection point. This area of 17,700 to 17,800. If we are able to get past this zone, you could potentially see 1,000-point recovery on the mid-cap index, and that's going to be great news for market participants, because then the broader market strength will be seen, and maybe the Nifty might then take a back seat. So more than the mainline indices, I'm actually watching the small cap and the mid-cap index very closely here, because if this rally has to continue, the mid-caps have to participate, which was not the case in the earlier occasion.
What would confirm the event of, or the likelihood of this event occurring, Gautam? Does the mid-cap index need to move above and stay above a particular level for a period of days for you to be convinced that we are past that inflection point and the rally is well and truly started?
Well, Neeraj, we are right there right now. As I said, I think 17,700 to 17,800. And let me highlight that early last week also we were at that point, and there was an indication that we could potentially break out on the upside. But there have been 3 or 4 failed attempts in the last 3 months. And those failed attempts did not give us the confidence to believe that the market rally has, the bigger picture market rally has too many legs. But now this is probably the 4th attempt. It's looking slightly better because last week, as the markets fell to levels of 10,350, the mid-caps actually did not participate on the downside. Many stocks saw volumes which had dried up. Many stocks had turned sideways. And it was, again, a handful of 20-30 stocks which actually took the Nifty down to those levels. So the disconnect which was there between the Nifty and the mid-cap last week was positive for the first time, and this gives me some confidence that maybe this attempt on the upside, could actually be genuine. But, while we are talking about the Nifty and the mid-caps, I think the overhang is really going to be the US markets, because the US market setup continues to be negative, and how we deal with the weakness in the American markets going forward is something that we'll have to wait and watch. So it's not going to be a smooth run. It's going to be volatile. It will be peppered with small corrections of 100, 200, 300 points from time to time. But the market is giving you the indication that it wants to respect supports, and you just buy that argument.
Right. For the bank Nifty as well, if we were to probably look at how it's performing vis-a-vis the Nifty, there has been a tad bit of an outperformance from the banks this time around. So how would you position yourself in the bank Nifty? Would there be a trading opportunity here? Would you wait it out for certain slightly more lucrative or favorable risk-reward levels to come about in the bank, as we're now at about 27,130 on the bank Nifty?
Well, the markets have not allowed you to wait it out. Had somebody taken that call late last week, let things stabilize, then we will take a call, you would have lost 400 points on the Nifty and 1,000 points on the bank Nifty. That's the sad part of the markets. They're just moving too quickly these days, and therefore one needs to be nimble-footed in this environment. And I must say that the bank Nifty was really the pillar of strength last week, because this index had outperformed throughout. It respected support levels very well from that level of 25,500, which it hit, on the state election results day. Today we are at 27,000, so it's already a 1,500-point recovery from the lows. And I think once the supply around 27,000 gets absorbed, because it's an important option strike, I think then you could see another 600, 700 points. So 27,600, 27,700 is quite doable. And I do believe that many of the private banking names are setting up really well from current levels. and there could be a trading opportunity of about 5 to 7%. And some of the PSU banks could potentially see a relief rally here. So if you have to participate in the market upside from here, it still has to be the banking space.
Just look at the Nifty bank.
I know. It's just like complete turnaround, and as we speak, it just keeps going up further. So now 0.5% higher from being down more than 0.5% in the morning. That's a good, strong bout of recovery that's coming in. 27,140 on the Nifty bank. Gautam, in terms of sectors, now while we're talking about the bank Nifty, within the banks, what is it that you like? Is it the PSUs that you favor? Are the private sector banks looking that much more well placed? And any other sectors that you are laying focus on right now?
Well, in the banking space, I would stick with the top 3 or top 5 private banking names. I think they are high beta, they move with the market. And in this market environment, you want to be in stocks, that move up with the Nifty and the bank Nifty. And therefore, the top three or four names, definitely come to mind. And, there I see a potential of about 5 to 7%, as I mentioned earlier. So that's one space that looks very exciting, and it could propel the bank Nifty to levels of 27,600, 27,700. Apart from this, I think the oil and gas index looks very interesting at these levels. It has seen a pretty large decline in the last few months. It lost almost 25% in value, and now it's seen a very gradual recovery in the last 1 month. And this recovery can potentially lead to another 1,000-point rally for the BSE oil and gas index. So that's one space I'm very kicked about. And I would follow that up with the auto space, which saw significant damage early this year. That index is also into recovery mode. Many of the beaten down stocks have formed nice bases at lower levels. And since the decline itself was so large, I think the upside potential for many of the auto stocks, whether it's an underperformer or an outperformer, is quite significant from here. So these 3 would probably be my 3 best trading bets in the market as we head into the new year.
All right, Gautam, it was a pleasure chatting with you. Hope to see you more often on the channel. Thanks so very much for joining in and sharing your thoughts with us. All right, that's Gautam Shah there of JM Financials. And while we were speaking, it's a real tear for the Nifty bank, and we're seeing a lot of interest coming about in stocks like, and even the smaller names, not just the larger names. So while Axis and Dividend have State Bank of India, they moved into the green. The smaller ones are also seeing some amount of traction. You've got the likes of Bank of Baroda, which is up 1%. The Kotak Mahindra Bank also has moved up 1%. Punjab National Bank is up 1.5%. IDFC is up 4% as well. So those are some of the names there which have contributed, but a good pullback by the banks.
You bet they are leading the charge, but I must say Sun Pharma, M&M, Bajaj Finance from the financial space, all of them seem to be doing rather well for themselves. Let's welcome in Amar Singh of Angel Broking. He joins us right now on the show with his thoughts on the charts. Yogesh Mehta of Motilal Oswal with us as well to talk about all that he believes on the fundamental side, plus talk about what's happening in the dealing room as well. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Yogesh, I'll just want to come to you first. Exciting last 15-20 minutes. Crude dips, currency appreciates. We are back into the green. What's been the last half an hour, 45 minutes mood in the dealing room? What have been the calls for the short term to your trading clients?
Yeah, good afternoon, Neeraj. Since India, it seems that India has totally decoupled from the world markets, and so far we are reacting to the US markets replica here in the morning when we open, and we react to the Dow Jones futures indication. Now we have totally decoupled since last 2-3 days it seems, and now we have our own flavor to move with the INR and crude both are in favor. So here we are on a buy side still. We are recommending on the mid cap ideas more than any other large cap stocks right now, and United Breweries Limited is there. Even on the metal sector, there are quite a dip has happened. So their name like JSW Steel and Tata Steel, we are recommending to buy for not for the next half an hour, but for position from here on. And there are a couple of few stocks as well in NBFC space like Mahindra & Mahindra Finance or the Bajaj Finance. So likewise, we are recommending all those as a flavor for next playing for the next 8 or maybe 7 to 10 days or 7 to 15 days kind of a horizon.
All right. Let's take a look at some more levels then. Amar, just run us through any strategy that you would have on the index or the bank Nifty right now.
I would say that looking at the index, if you look at Nifty and Bank Nifty, anyways, technically Bank Nifty is in a stronger position because the 3rd December high that was made, that has been taken out by Bank Nifty, but not by Nifty. So clearly reflecting that it's more the financials which are leading the way. And Bank Nifty seems to be a better bet. So what one can ideally do is that it has taken out its highs of 3rd December, 27,037 trading, almost 100 points above that. So any dip towards 27,100 on the futures side means that can be used as a buying opportunity with a stop loss below 27,000 and a target of 27,350 on the upside, because the trend definitely has reversed. And also those who are on the short side in Bank Nifty, somewhere they would have got stopped out once this high has been taken out of 3rd December. And so that possibility is there. So we could witness a sharp up move from here.
Okay, let's talk about some stock ideas. What would you like to initiate at this point? We've already seen quite a good run up in the overall market breadth also, which is positive at this current juncture. Last few days have been good contributions coming in there. What would you do with stocks?
Yeah, I would say the first stock to look at is Tata Chemicals. What we are witnessing in this particular stock on the technical side is that on the weekly charts, we are witnessing a bullish divergence. It has taken strong support on its key levels and has bounced back from almost 650, currently around 715 or so. And if you look at it somewhere in the region of 715, 720, that's a crucial resistance. But the momentum that seems to be building appears to suggest so that the stock has upside moves. So any pullback in this stock towards 710 levels, ideally that can be a good level to buy. With a stop loss of 687 and a target of 748 in the short term. And the second stock to look at is from the FMCG space, and that is Colgate-Palmolive. What we are witnessing here is that this stock is one which has been extremely strong on different time frames. Even the intermediate term trend, the stock has been extremely strong. So that's the reason the stock witnessed some minor pullback from almost 1280 levels to 1180, and then again has bounced back. Currently it's around 1310, and with a strong bullish momentum continuing to be on the short-term charts as well. So this is one stock one can look at. So currently it's around 1310. Any pullback towards 1295, 1300, ideally that can be a good level to buy. With a stop loss of 1274 and a target of 1348 in the short term.
Right. Okay. Those are some stock ideas coming in there. Yogesh, we were talking about Coal India a while ago and the different scenarios possible with the kind of dividends that could be announced on the 20th of December. They've been pretty generous with the kind of dividend announcements in the last 5 years at least, with the highest being I think 27 or 28 rupees per share. But any scenario that you are factoring in terms of a special situation that you would look at ahead of the announcement?
Yeah, that's right, that Coal India has announced a very decent dividend yield so far for the investors and so far for government themselves. What we believe is that this time it is quite, it's not that we can project that how much dividend they are going to be announced from the current scenario because of the profitability which is shrinking, and somehow the OFS and all are also as a hangover. It seems that probably a dividend yield of almost 5 to 6% they will maintain. So that would be in the range of probably in the range of best case scenario 15 to 17 rupees on the upper side. And if there is any positive element of surprise, then it could be in the range of at around that much only, or maybe 1 rupee here and more. So the profitability and the wage hike issue and all, they will eat away quite a few cash from the book. But government stands on getting more and more dividend from the PSUs. Probably that will drive more, and hence we can see that 5 to 7% dividend yield in this range could be the one should expect from on the meeting day.
I believe Motilal Oswal has a positive call on Coal India, 358 or so about the price target on the counter.
Yeah, we do have coverage and we have a buy call on that, and we have a revised price target of 320 rupees per share.
Okay. What else? It's been active. The Nifty and the Sensex too now about 0.2% in the green, so we're doing rather well for ourselves in the session today. what's come off quite rapidly today is Z Entertainment. So 7.5 or 8% lower. The note from Merrill Lynch or Bank of America Merrill Lynch probably playing part out here. It's a strong cut that's happened on that counter today. Difficult to give a sell call after such a sharp fall that's already happened, Amar. But what would your call be on this one?
Say, if you look at Z Entertainment from a long-term chart, it continues to be extremely weak. And from where the stock has corrected, that was a crucial resistance zone also. So, if you look at from a short-term, intermediate term, both were in overbought zone. So ideally, there was a sell, but the down move has been extremely sharp, as you rightly pointed out. And it could, because if you look at it, it was in a consolidation zone somewhere around 440, 450. That was a crucial zone for it. So if this fall continues, then it could ideally find some strong support coming around 430, 440 zone. That's a very crucial support zone for the stock, and the stock definitely would now find it extremely difficult to trade above yesterday's high, that was 506.9. So somewhere it seems that the upside is capped for the stock, and the downside, if there is further selling, the stock is likely to find extremely strong support around 430, 440. Long-term trend for the stock remains, I would say, still remains down.
What's your house view on Z? It's fallen quite a bit, and as I said, because Merrill Lynch believes that there are multiple headwinds which could lead to maybe some derating, etc. But what's been the house call at Motilal Oswal for Z?
Neeraj, for Z, we are still maintaining our buying stance, and we believe that the capex they have planned even for the third quarter onwards current year for Z5. So that will again, that foresees that there is no much of a competition threat for the management as per their con call in the Q2 post Q2 results, and they are maintaining the margin at around 30% or 32%, in the range of 30 to 33%, even after delivering in the first half of the same pace, and they are continuing with the third quarter, fourth quarter as well. So here we believe that strong ROIC number in the balance sheet shows that the worst could be behind. Probably, I'm not contemplating anything on the note which have come out of one of the brokers, but around 20 rupees EPS for FY20, and OTT segment again they are also striving towards. So we don't foresee that there will be much of a downward risk for this stock from current level as of now. And even if you give a 20 times weightage for that 20 rupees EPS for FY20, the stock would be at 400 rupees. It cannot go below that level, it seems, at present, with the looking at current scenario, and the management has highlighted whatever guidelines for the future. So we believe that upward trajectory is still open, and this is not that overnight which has come with the OTT threat or the competition like from Netflix or the Amazon Live. So we don't foresee that will happen so easily and so fast.
Okay, well, as we speak, we're trading at the highest point of the day. We've already given you multiple calls. I think most experts are bullish. In fact, this morning as well, I think the call was that the dips should be bought into. I think strong buys given on both the Nifty Bank and the Nifty. And I'm glad that those calls have paid off, because we did start off lower. The only point is, as we reach the end of the day, we're looking like we'll end with a fair degree of green, and that's not a bad sign at all for somebody who managed to take those calls. Actually, you should look at the options distribution chart also to see if the support levels have moved higher up, because up until a few days ago, your maximum concentration of puts on the downside was 10,500, and now that has shifted on, and it's come considerably higher now to about levels of 10,800. So the range though was wide between 10,500 to 11,000 on the upside. That range has become narrower from 10,800 to 11,000. So your next best support level, your next immediate support level now shifts to about 10,800. So that's an interesting shift of position, and looks like it's moving in the right direction, at least for this point in time. Well, looks solid for the time being. Let's see for how long does this last. But as I said, it's not just about the gainers. There are plenty of gainers, by the way, which are all moving at the highest point of the day. As we speak, Bajaj Finance 2536 is trading at the day's highs. HCL Tech has recovered a lot of lost ground today and 1.5% higher. So I think if you look at that stock, was in the red, is now trading at the day's high. So good going out there too. And banks, ICICI, Kotak Mahindra Bank, etc., seem to be doing okay for themselves too. Come in. If you're focusing on the large caps, Amar, just a couple of names. Bajaj Finance, which is trading in the day's highs, and HCL Tech, which after dipping lower is trading at the day's highs too. Do the charts of either of these two stocks looks attractive for a trade at these levels?
Yeah, looking at Bajaj Finance is one stock definitely looks positive on the charts. The short term, however, we are witnessing some consolidation because if you look at it, the 30th November high, which it had made of 2564, that is still to be taken out, and it is witnessing some, I would say, consolidation. So I would not recommend this. And if you look at, on the other hand, if you look at Bajaj Finserv, so this is one stock also which continues to be strong and positive. So this would be a better bet. Any pullback towards 6100 levels, that can be looked as a buying opportunity, and taking out the 62.20, 562.30, then the stock would trade higher towards 63.50 levels.
Yogesh, a question that a lot of people tend to ask before we thank you. Bajaj Finance, HDFC AMC, HDFC Standard Life, one insurance player, one AMC player, again the largest player, and one NBFC player. If you had to bet on one name out of these three, which one would you bet on and why?
But what is the time horizon, Neeraj?
Let's say somebody is okay with 2 years.
If somebody is okay with 2 years, then I would say I would not opt for one but two. Then it would be HDFC Life and HDFC AMC both together, because HDFC Life should be some longer tenure, maybe a 3 to 5 years kind of tenure. Then horizon, then it would be a very much okay. Currently, people are the communities evaluating these companies as 2.5 and 3.5 times EV, and that is a little expensive as of now. But the growth trajectory is still very strong with 25 to 30% growth for next 3 to 5 years. Then HDFC Life can continue with showing stellar returns. HDFC AMC, because there are some relaxation norms which have come in the expense ratio of the funds and the AMC itself. So there is some moderation there, but we believe that they will not last much, and they will not gonna stop the growth for this company, because nowadays as we look at the penetration level is going higher and higher, and the reach is also going deeper and deeper to the tier 4, tier 5 and the village penetration level. So there we believe that the AUM will keep on mounting up and piling up with more and more participation by the people, because we don't have any other asset class available for investment as lucrative as the equity. So this is the best ever time frame to participate into the bull run for next 5 years post election. Even if we consider if the second term continues by the same government, then we will have better days, and we will be looking at Nifty from here at 20-25% higher level. So there I believe these two companies can be betted on for the long term, those who are shying from the volatility and the risk averse people.
All right, we'll leave it at that, Yogesh. Thanks very much for joining us. Appreciate you taking out the time. And while we are talking, we've got a further dip in crude oil prices. So should quickly pull up what's been happening on Brent crude, now down about 3.25%, and it's at the year's low. So the commodity right now, the intraday is actually more pertinent. So while we've got WTI at 48.15 and 57.64 on the Brent crude, we should actually get a quick comment on what's been happening here. But nonetheless, it's a steep drop. It's a vertical drop in Brent crude prices that we are seeing over the last few minutes of trade. And I think the last time around that we saw this was sometime mid-October of 2017. So almost a 14-month low on crude oil prices is what you're seeing at this point in time. Brent crude out there. We should try and get some expert opinion on the same, but we'll wait and watch. Amar, anything with regards to the oil and gas SPAC in particular, be it the upstream companies or be the oil marketing companies?
Yeah, I would say that if you look at it, IOC in particular seems to be slightly on the upside, and it has bounced back. And technically also, if you see, it has a bullish divergence on the weekly charts. So clearly reflects that the downside is limited for the stock, and the stock has an upside potential to rally towards 160, 170 levels. So one can look at this particular stock.
Okay. That is from the oil and gas pack. Well, other stocks that are making their moves, and now we've got the Nifty at 10,902, come off a few points from the highs of the day, but nonetheless in the green, 0.1% or so. Bank Nifty still holding strong, 0.5% higher this afternoon, 27,142 for the banks. We'll take a very short break on that note. In the meantime, let's hear out a few quick comments from Andrew Holland of Avendus Capital Alternative Strategies on global market sell-off and its implications for us.
Yeah, obviously it's going to have a a negative sentiment impact, but I think thinking about 2019. I think you're going to have bouts of weakness in developed markets, which is going to be a great opportunity, to pick up stocks in India, because the way I'm thinking about it is that when we hit highs in August of this year, the oil price was at 80, and we had a more hawkish RBI governor, and both of those reversed significantly in the past 1 month. So with a lower oil price, obviously that's great for the deficit and for inflation. And given that, then obviously the new RBI governor, I think, who will probably be more business friendly, has the scope to reduce interest rates. So I think the liquidity, problem that we were facing maybe September, October anyway was going away, and this will be helped by further kind of liquidity and monetary policy by the RBI, which I think will be more accommodative. So all of will be there, but I think that's the opportunity in 2000. Well, now and 2019 will be these opportunities that will be given by developed markets, where I think that the problems are real, compared to India, where we're still growing at 7.5% GDP growth.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 26 and a half minutes left for the markets to shut shop. Should bring up the turnover once and see if volumes have picked up. The markets are steady as to where they were about 15-20 minutes ago. About 6 lakh crores on the NSE F&O, NSE cash about 23,000 crores. So the volumes, F&O volumes are okay. The cash volumes are subpar, at least the NSE cash, but we still have about 25 minutes left. So you never know what could happen there. So trading activity fairly brisk as we speak. we'll just get in the Fab 4 stocks of the day as well. I think some of the stocks would have recovered a little bit of ground and would be interesting to see what's happening there. Trying to see what's moved up in the session today quite strongly. Actually, in the last few minutes of trade on the Nifty power grid, some more inching up. So watch out for that. Indiabulls Ventures, some more inching up. So about 1.5% in the green, but a bit of a pickup in the last few minutes of trade. So do watch out for that as well. And Motherson Sumi is up about 2%, but a bit of a spike in the last few minutes of trade, if I'm not wrong. Just that little bit of a tinge upwards in the green. 171 and counting on this one. Do they form a part of Yash Upadhyay's list of the Fab 4 stocks? Well, let's ask him. Yash, what's made it to your list?
Afternoon, Neeraj. I'll start with Zensar Tech, and that one is up about 2.5 or 3% after a JM Financial report which initiated coverage on it. Now they have assigned a buy rating and have set a target price of 290 rupees, which indicates a potential upside in excess of 19.5% from the current levels. IL&FS Transportation is also in focus today. It's locked in an upper circuit of 5% on the back of reports that the company has started the process of selling its road assets. So watch out for that one. Merck Electronics is up as much as 20% today after the company said that it would be meeting a list of investors. Most notably among them is Rakesh Jhunjhunwala's Rare Enterprises. So watch out for that. And the last one that I want to highlight is United Breweries. That one has been gaining for a second consecutive day, up nearly 9.5% in just that period. Volumes too coming in significantly higher. So watch out for United Breweries.
Okay, those are the Fab 4 stocks of the day that Yash has highlighted for us. Yash, thanks very much for that. Gaurav Bissell of LKP Securities joins us on the show as well right now. Gaurav, thanks very much for taking out the time. Let's talk about the here and the now. We've got 10,900 on the index. How likely are we to see those levels of 11,000 yet again? And would your strategy too be that of a bull and every dip likely to be used as an entry point?
Good afternoon. In all of the last conversations we have had in last few days, I have been saying that Nifty has given a strong breakout and it's just small consolidation. Today also we saw consolidation for just few hours and we are again at a high point of the day. There's a good chance that we may see 11,000, 11,050 in next few trading sessions. Nifty is on the verge of a decent breakout on hourly charts if 10,900, 10,910 spot level is held on to. For Bank Nifty, that is a much better index to trade for the reason it has given a very strong breakout above levels of 27,050, 27,100. If these levels are sustained, I would not be surprised with 400 to 500 point up in the next 2 days.
Okay.
What's an actionable trade right now, Gaurav? We are about 27,161 on the Nifty Bank. Can you initiate a fresh trade here?
What we have advised to our clients is buying a Nifty 11,100 call option at 25. It's trading around those levels only. It can double from here. The reason that I'm still waiting a little bit because the breakouts were seen at levels of 27,050, 27,080. It's 70 points up. There's a possibility that it might see small consolidation. The call options are looking fantastic. The levels are looking fantastic, but a small consolidation can result in a dip in the premiums tomorrow, the weekly options. So that is the reason I'm waiting for some clarity to come. But if somebody wants to buy a 27,500 call option at 25-30 rupees, not a bad bet. It can triple from the current levels.
What specific stocks, Gaurav?
The first recommendation today would be buy on Berger Paints. About 30% OI addition has been seen getting built in the name. This is not a very usual phenomena. It has given a good breakout on daily or the hourly charts. It's not very liquid in options, but the kind of data that we have seen so far is looking quite robust. It can test levels of 340, 345 with relative ease. For me, the stop loss would be 322, 323, and targets would be somewhere around 340, 345 for next 2-3 days. Second would be buy on Hexaware. It has come out of the consolidation. 300, 330 was the consolidation phase. 10% of addition has been seen getting built, trading above the medium-term averages. One can buy with the stops of 332. The target would be 350 and above.
Okay. So those are some ideas. By the way, the interesting bit is that IT index was looking slightly wobbly at the start of the trading day today, but it's picked up a fair bit of steam, at least in individual stocks. Okay, again, cooling off a little bit, but we've seen a call coming in on HCL Tech. We've seen a call coming in on Hexaware right now. Nifty IT, a bit of a recovery. Maybe it just remains a market performer, but Looks okay. Let's get in a fundamental voice. Dipan Mehta, a member of BSE, joins us right now on the show with his thoughts on the markets and what to do in a scenario like this. Dipan, from the last time that we spoke until now, 2 or 3 things have happened. The state election monkey is off our backs. The decision is out for everybody to see. Crude is cooled off even further, despite the OPEC meet and the decision thereof. And we have the possibility of a rather dovish Fed tomorrow. Would you be enthused to put fresh money to work as we nudge the 11,000 mark? Or get ready to nudge the 11,000 mark on the Nifty?
Yeah, I think gradually investors should start putting money into equities depending upon their cash flow, depending upon how much cash they have in the portfolio and whether they have sold shares earlier or not. But these are good times to get into quality blue chip companies. We are seeing a gradual improvement in the macros, especially with oil prices coming off. And what this election result and the way the market behaved after the results were known clearly says that it's not very much concerned about coalition politics, and that even if there was a coalition government, a non-NDA government at the center, that also would be just about fine. Given that the last 5 years also under BJP, the economy has not done exceptionally well also. So I think that gradually there's a maturity coming into the street, into the market, that politics is not all that important. And if you have a reasonably stable government even in May 2019, because of a gradual improvement in the macros, I think investing in equities will remain the best avenue as far as parking of savings is concerned.
Okay. Dipan, the interesting bit, and nobody's out here to judge whether it's right or wrong, but the behavior of market participants towards NBFCs, PSU banks, etc. has changed post the change at the top of the Reserve Bank of India. Now, it may be coincidental, it may be preempting a few things which may or may not happen. But how are you positioning yourself in this space? PSU banks and NBFCs, not the private banks. That's probably still the current favorite. But PSU banks and NBFCs, would you believe that there will be some more risk appetite for these pockets and therefore worth a look at?
So I think PSU banks could be in a bit of a positive trading bounce purely on account of lower provisionings and lower credit costs and gradual improvement in their balance sheet and loan growth, considering that they have been remaining stagnant for so many years or so. So you could certainly see better numbers coming in from the PSU banks, and just on account of lower provisioning, the alpha as far as earnings are concerned could look quite fantastic. But these stocks are not there for the longer term, and once this process is over, we do feel that the best money will still be made in the private sector banks and the NBFCs. And we have a positive view on the NBFCs also, especially those NBFCs which have been associated or floated by large business houses. We do not expect those NBFCs to have any liquidity issues or any problems in terms of raising their resources. And these NBFCs have proved to be nimble-footed, and they have gained market share at the expense of PSU and other private sector banks. They have set up a good network as far as retail lending is concerned, and they have sharp practices as it comes to NPA. So the NBFCs have demonstrated that they have a very viable and sustainable business model. And now that the fears of a liquidity crunch are receding and they're able to raise resources at decent interest rates, they should be able to sustain their growth rates, maybe 1 or 2 percentage points lower. But by and large, the entire process of NBFCs creating a good loan book and having a good return on investment, that entire process should continue going forward as well. So we have a positive view on all the banks, PSU banks for the short term, I think, as I said, trading bounce, and NBFCs and private sector banks for the longer term, where we feel that they are in a secular growth momentum.
Right. Okay. Since we're on the topic of the financial space, I want to talk about Kotak Mahindra Bank now, Dipan. And obviously, the clock is ticking, and we've got the promoters' deadline to reduce shareholding coming up in just a few days now. What's the outlook there on the counter now that the pressure builds up?
See, I think any negative sentiment on account of promoter dilution could be an opportunity for long-term investors to get into Kotak Mahindra Bank. It's been a fabulous wealth creator, a consistent performer, and in times like this when a lot of the weaker players are getting impacted because of liquidity, because of various other issues, NPA problems, I think Kotak Mahindra Bank certainly will be able to grow its business far better and in a risk-free way, the way they have been used to doing so. So we have a positive outlook on Kotak Mahindra Bank, a lot of value in the subsidiary companies as well. And overall it benefits not only from increased retail lending, but they are now growing the corporate book, and the financialization of savings also benefits Kotak Bank. So when you look at a comprehensive picture, I think it's one of the best financial services bank available for investment in any, and that's the reason why it trades at a premium valuation as well. So any correction in stock prices because of the promoter related issues could be an opportunity for long-term investors in Kotak Mahindra Bank.
Well, doing okay for now. Dipan, the other question that comes up is whether or not large cap IT will continue to remain a market performer, because a lot of people now apparently believe that you probably look at that as a market performer. If the market does well, then maybe large cap IT could do well, Infosys in particular, even though it's correcting a bit today. And that's about it. And no big corrections, no big uptakes. Would you second that view, or would you be a selective buyer in any of the large cap IT names?
No, I think what you just said resonates with me, and it will not be a great wealth creator or a wealth destroyer. It's more like a utility company, the IT sector at this point of time. They may consistently continue to grow at that 8 to 10 or 8 to 12% type of growth rates, which are not that exciting. At the same time, they provide a safe haven, because if there are issues in the domestic market, if there are anything to do with consumer demand or capex cycle or any of the internal factors of the rupee depreciates, then IT companies are a safe haven for investors to park their money. But these are not going to be great wealth creators from this point on. But there are certain selectively investors could look at certain counters in the IT space, the likes of say LTT, that's L&T Technology, or Tata Elxsi for that matter, or some of the product companies like Intellect Design, Nucleus Software, Majesco, I think, which have a slightly differentiated business model where there is scope for non-linear growth. So we would say that within the IT, our preference is for such companies which have a slightly differentiated business model and more IP related kind of offerings. Those are the ones which we feel would outperform the broader IT industry shares.
Okay, just stay on with us, Dipan. Lots more to talk about, and then go across and get some technical chart checks as well with Gaurav and Amar. But it's time now to take a look at what dealing rooms are recommending. Yatin Mota is here with us with his channel checks this afternoon. Yatin, what are you gauging?
Well, Devina, banks are in focus, and IDFC Bank is one stock wherein dealers do indicate that domestic funds are buyers in trade. And on the back of the momentum in IDFC Bank, we also have Capital First, which is gaining traction since both of the entities are merging at the end of the day. We also have Canara Bank, that is one stock wherein dealers do recommend a buy today, sell tomorrow kind of a strategy. And this is basically a technical kind of a call that they are giving to their clients at this point in time. And do watch out for the IT basket. The way rupee has strengthened, and general weakness in the global markets do suggest that a lot of FIs are now underweight on these technology stocks, and dealers do indicate that FIs are sellers in most of these IT names. So watch out for a couple of them, including TCS and Infosys. Dealers do expect that the pressure on IT stocks could continue moving ahead.
Well, certainly under pressure in the session today, but maybe just market performers, and that's about it for these names. As we speak, and as I'm looking at the Nifty Bank, it's 27179. We're closing in at the highest point of the day. And looking at stocks in the financial space which are doing okay for themselves. Actually, the first 8 or 10 names don't have a banking stock. It's only after that that a clutch of banks are participating well and leading the Nifty Bank higher. SBI about 1.25%, Kotak Bank about 1%, ICICI Bank about 1%. So three large names, reasonable weightages on the Nifty Bank are helping this index now trade at the highest point of the day. Amar Singh, if you had to bet on one out of these three names for a trade, which one would it be? SBI, ICICI, Kotak?
I would say Kotak is a better bet, because what we are witnessing in Kotak is that it continues to be extremely strong on the charts, and technically it did witness some correction from almost 1280 levels to currently around 1235, 36. So ideally this is a good level to buy. One can have a stop loss below 1180 and a target of 1320 on the upside, because the stock continues to remain strong.
Look at, by the way, as we speak, look at a couple of losers. Z is now down 8.3% and ABB India is 5.5% lower in trade today. So that stock too reeling under pressure. But on the Nifty 200, the top gainer, well, maybe not a surprise really, is Interglobe Aviation. 5.5%, 1118, a crude price fall would help aviation. Jet is a separate case in point that may not react, but Indigo, sharp uptick, 1117 right now and counting. Dipan, is there merit in the theory that look at companies which will positively benefit from a crude price fall, not because it seems like a flash in the pan move, but despite the best efforts from OPEC and the decision taken, their crude prices have still come off on supply concerns, which arguably means that there is a higher probability of crude prices not moving up back to those $65–70 on the Brent side. Should one look at such plays which will benefit out of lower crude prices?
See, trying to project crude oil prices is a completely wasted effort. And there were a point of time when it was at 84 and a lot of analysts thought it would cross $100 a barrel, and then when it was at $40, there were projections of $20 a barrel. So it's very difficult to get a handle on crude oil prices. All that we can say is that when crude oil falls, then aviation, some of the chemical companies, some of the paint companies, oil marketing companies will benefit, and that's a good trade to take whenever you see that crude oil is falling. That's about it. Coming specifically to aviation, I think what benefits aviation as compared to, say, the oil marketing companies is the fact that there's underlying growth in traffic around about 15 to 20% or thereabout, and that certainly benefits large players like Interglobe, which have the majority share. And considering that a lot of its competitors are in a problem situation and maybe looking at cancelling flights, or maybe may not be able to increase capacity as aggressively as Interglobe is, there's a good chance that Interglobe may further increase its market share. And a lot of the gains on the crude oil front are being absorbed by the company itself, which would mean that the profitability will improve significantly going forward. So the market is right in terms of rewarding Interglobe and avoiding some of the competitors like, say, a Jet or a SpiceJet for that matter. But then, these things can turn quite quickly, and if crude again goes up to $70 or so, then you could see a correction in Interglobe as well. So the best way to play this particular industry and all crude sensitive industries is to kind of, buy them when the crude is at a high and the expectations that crude oil will come down, and that would provide a trading bounce. Not at these levels when the crude oil already has fallen and the stock prices of crude sensitive companies has already moved up.
Another interesting stock is Dish TV. On a 7-day graph, the stock is still giving you returns of closer to 9.3%, though in today's session it's down 2.5%, but that's the 7-day move on the counter. It's at 36.5 right now. Gaurav, do you track Dish TV?
I do track, but again, vaguely it has not been doing that well. And even at these levels, I would not be too keen in entering into a trade. It has reversed from the immediate hurdle of 38 levels. Fresh buying only about 38, as long as trading below 38. Either you buy a put option or you sell for target of 34, 33.5. Not a very good stock to be in at this point in time.
Okay, 320. Let's get in closing strategies from both our experts. Gaurav, to you first. Your top closing strategy.
Among the names that I mentioned, the Berger Paints, that is one looking quite interesting. And apart from that, if somebody wants one more trade, MCX is looking very strong. The OI addition is phenomenal. It can go towards 760, 765 tomorrow itself.
Okay. Amar, what about you?
I would say that one can look at Apollo Hospitals because this is one stock continues to remain strong on the charts. So technically, on the short term, it did witness some correction, but again has bounced back. Currently, it's around 12, 25, 27 levels. So one can look at this stock. So any pullback towards 1210, 1215, that can be a good buying opportunity with a stop loss of 1184 and a target of 1271 in the short term.
All right, we've been talking about how, pharma names benefited from the depreciation of the currency. Now the reverse is happening on the back of the strength in the currency. So you've got the likes of Nipca Labs, you've got Torrent Pharma, Cadila Healthcare, Walkhart, all of these names down under in today's session by anywhere between 1.5 to 2.5% apiece. Would you be a seller in pharma, Gaurav Bisa?
Sun Pharma is good. We have recommended to our clients by way of options. It has a mid hurdle at levels of 432, 434. If this particular zone is taken out, then we can expect some more upside towards the level of 442, 445. Again, I would not recommend buying either in futures. Use options. A 440 call option would make more sense. Trading at 8 rupees, I think that can be a good trade. Have a stop at 6 rupees. 8 rupee option can become 14 rupees.
Okay, so some stocks and the way they have moved. Just about 5 minutes left for the markets to shut shop. Final thoughts from Dipan Mehta before we let him go. Dipan, you started off this interaction saying that investors could selectively deploy money in the markets currently. What would be the pocket on which you are a bit contrarian to the markets or to the larger investing community? What I mean is that we can't figure out what each of the brokerage houses, etc., are saying, but just the large pulse of what the street is. The street is not completely bullish on real estate. If you are bullish out there, the street is not very sanguine on, or street is maybe very bullish on pockets like sugar and paper, small pockets at that. If you are bearish out there, anything that you are contrarian.
See, I think a lot of brokerages are very positive on commodities, but we have a negative view over there with overall global growth slowing down and what is happening in China where they are struggling to get 6% GDP growth rates. We do feel that ferrous, non-ferrous metals and some of the other commodity stocks could face some pressure going forward. So that's the sector to avoid. We'd rather be in the commodity consumers than the commodity producers. So that is one slight contrarian call. And we're very positive on the NBFCs, especially consumer finance, microfinance, gold loan companies, which have been beaten down because of concerns over liquidity, whether they'll be able to raise enough resources to lend or not. But we feel that the kind of concerns and the fear that the street has are in a way unwarranted. So that's another sector. And lastly, I think companies which are engaged in capital goods, especially engineering procurement companies, and the top of the list over there is L&T. We do feel that that sector and L&T in particular may do exceedingly well going forward, given the kind of order book position, and a lot of this order book is at good margins as well, given that they've been very conservative and careful when it comes to bidding for new contracts, and also the execution should improve. So the execution to order book ratio also should improve going forward. So keeping that in mind, we have a positive outlook on capital goods and EPC companies, L&T in particular. So broadly, these are the kind of buckets that we are investing money for our clients. And then the usual consumption-oriented stocks like FMCG, building materials, I think those also should do well given that rural consumption is picking up. And a lot of the FMCG and the consumer-oriented companies are expanding their network in the rural areas to get the maximum growth.
Okay, Dipan, we'll leave it at that. Thanks so much for taking the time out and being with us today. I really appreciate your time and your observations. Gaurav, Amar, stay on. We'll just take in final thoughts from you post-market close, but 2 minutes left for the markets to shut, so let's start wrapping up. We're closing at the highest point of the day. It may not mean too much optically, but we're down about 0.5% at the start of the trading day, so it's been a good recovery on a day when the world markets haven't really quite gone up. We are charting our own course today. The mid caps and the small caps too in the green. The market breadth would have improved 0.7% for the small cap space, testimony to the fact that there's some gains out there at the broader end of the spectrum. Let's first dig out what's happening on the index and what's moved around. Sun Pharma 2.5% higher. Bajaj Finance about a couple of percentage points. We don't have too many banks despite in the top 10, despite the bank Nifty doing rather well for itself. Vedanta about a couple of percentage points. M&M about a couple of percentage points. L&T about 1.5%, and SBI about 1.5%. What's not doing well? Z 8.5% lower. UPL 3% lower. Infosys about 2.5%. Tech Mahindra 1.5%. ITs looked slightly wobbly. It was trying to recover but lost out a little bit. Indiabulls Housing about 0.7%, ITC about 0.5%, HDFC about 0.5% as well. So that's a set of stocks which are moving around on the index. But Devina, what about the mid caps and the small caps?
Well, a clear outperformance in today's session from the broader markets, the mid-cap index as well as the small-cap index, with gains of more than 0.5%. And I'll quickly run you through, some movers in trade. So while Jet Airways is the one that's not done a whole lot much and is down about 3.8%, I think that probably is not the right figure to go by. But a few stocks to watch out for. We'll start off with the GNFC on the gainers list. That stock's doing okay. You have a United Breweries, which gains ground as well in today's session, and yesterday's session too was one of the key gainers on the broader market space. So 5.5% for United Breweries. Capital First from the oil and gas space, you have a Chennai Petro, which is doing okay for itself this afternoon. Ujjivan Financial is about 3.5% higher this afternoon. Aviation, obviously falling crude oil prices gives it some relief. So aside from what Jet Airways is doing, and Interglobe Aviation is up in trade today. So that's closer to 5, almost 6% of the highest point of the day that we're going to be seeing a close for Interglobe. IDFC Bank, Emphasis moves up as well, so it's crossed 1,000. That's a good climb for Emphasis, which was stuck somewhere closer to about 970. Okay, it's come off, so the last few minutes of trade has seen some selling pressure building up on an Emphasis. PFC is the other one that has gained ground too in the session this afternoon. Amongst the losers, you have the likes of an ABB, which is down in trade today, Dish TV, Ipca Laboratories, Mindtree, and some of the pharma names which looked weak in today's session, including the likes of a Walkhard and a Torrent Pharma. These are some of the key losers in trade. But nonetheless, with today's tally, we were up 5 straight days of gains on the index. This probably adds one more day of gains. So six days is the tally now.
It's not been bad. Doing rather well for itself, almost all the key indices, and we should be happy with the performance. Bring up the market breadth, that would have improved and improved. I would reckon would have improved. Yes, it has. So in favor of the advances, 867 to 672. Good going really for the market breadth in the session today.
The turnover also likely to pick up. So we had a number of about 6 lakhs when we last took a check half an hour back. That's nudging 7 lakhs. Now on the NSE cash, moving closer to average of about 30,000, but still not there yet. 27,250 on NSE cash.
Yep. And well, the contributors, you'll have Reliance would naturally be there because of the weightage, but ICICI Bank and Kotak Bank finding their way into the list of gainers. So they were not amongst the top 8 or 10 gainers, but nevertheless contributing a little bit.
L&T being a heavyweight there, doing okay, and some of the banks giving up.
Yeah, Infosys 17 points in terms of contribution to the losses. Nevertheless, final thoughts from our experts. This morning the call was clear, Jadwaran and Gaurav, this time around I'll start off with you. This morning the call from our experts was clear that go out and buy on any dip. What do you do if we start off marginally higher in tomorrow's session? Let's say the Nifty Bank starts off another 50, 100 points higher. What does one do then?
Well, at those levels, I would again wait some more time because it has immediate hurdle levels of 27,300, 27,350. So any dip towards 27,100, I would wait for that. For Nifty, even a 30-40 point higher up move would be interesting to buy, would be lucrative to buy. We can again expect 100 point up move from those levels because Nifty has just about given a breakout, whereas Bank Nifty is up by almost 150 points over the breakout level. So I would wait some cooling off in Bank Nifty. For Nifty, we can buy.
Okay. What about you, Amar?
I would say that one needs to be slightly cautious still because, as I said, that the 3rd December high of Nifty that has not been taken out. So clearly, it shows that this rally is more on the financial side. And till the time we don't see a decisive breach and close above the 10,950 mark, I would say the higher levels would witness with selling pressure. And also, if you look at the trading for the last few trading sessions, we've had up gaps and then the market closing lower and then again up gap and market closing lower, and today there was a bounce back. So I would say that one should be slightly cautious and wait for I would say 10,950 mark to be closed. 10,950, 11,000, that's a crucial resistance zone. So it's more of a trading range. Higher levels, if the market is not able to hold, we'll witness profit booking. But yes, what we are witnessing in Nifty is that now the support range has moved up earlier somewhere around 650. Now what we see is around 750, 740. That's a crucial support zone for Nifty.
All right, we'll leave it at that, gentlemen. Amar as well as Gaurav. Appreciate both of you taking out the time and joining in this discussion. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching from Neeraj, myself, and the entire team that's put the show together. Coming up next is the Market Wrap.